On today's episode of the Habitz Podcast, we've got Mike Whyte from Real 5 Finance, and he'll be sharing with us his good habits when it comes to securing business funding. So Mike, for those tuning in, what qualifies you to be our guest expert when it comes to securing finance for business?
So I'm a commercial finance broker, been in the business finance area for a number of years, and have helped businesses from small scale SMEs, man in a van, up to multinational companies secure funding, whether it be on a loan basis, asset finance or invoice finance. There's a multitude of options there, and I can help businesses secure funding.
So I imagine with what's gone on with Brexit and now with lockdown and COVID, there's a lot of businesses that are looking at alternative ways to raise funding and finance their operations so they can continue.
Yeah, absolutely. So the government have done a good job with the schemes they brought in to support businesses through the pandemic, the bounce back loans, the CBILS loans. But there's a lot of businesses there now who've had that money, they've spent it, and they're in a situation where they need to look at additional funding routes. So I can help them. It could be an invoice finance facility where they can unlock the money that's in their invoices and get that paid early before their invoice is paid by a client. Or it could be an asset finance. If they're looking to buy a bit of kit, they can actually get some funds secured on the value of that asset, and it makes it a much cheaper funding solution for them.
So I bet a lot of businesses then get it wrong, or they panic, or they don't know what options are available to them. So what are some of the bad habits of these businesses when their sort of money is tight that they might fall into by accident?
So a lot of businesses think that they need to go to a bank, and they go to the bank they usually bank with. The bank is very risk averse, so they may say no, and then the client thinks, that's me, I'm done, and they have nowhere else to go. They're not aware of the different options out there. So there could be a situation where someone thinks they need a 50 grand loan, and it's to get out an office, it's for a bit of cash flow, and it's to do other things, where they can structure that in a way where it's more cost efficient and there's lower rates by doing 2 or 3 deals instead of taking a 50 grand loan.
So if I'm a business now and I'm looking at raising finance, what are some of the good habits you think I should be doing to make sure that I do secure that funding?
Speak to an expert like myself. The amount of people, as I say, you would go to a bank and they think the bank is the only source of funding they can get is unbelievable. So if you come to an expert, it doesn't cost you anything to speak to me. I don't charge you for my time. I get paid by a funder. So I will put together a bespoke solution for you. So it could be for one area of your business, you can get invoice financing to help you with your cash flow. You could get asset financing to help you kit out your office or buy a new piece of equipment or machinery, depending on what industry you're in. And then you can then get a smaller loan, which will be more cost effective to you for the final part. So if you speak to an expert, lay out the plans, then they can help you come up with a solution.
So speaking to an expert, you might know that there are more avenues open to you, more options available, so you can make a better, more informed decision.
Yeah, and there's a multitude of options, there's a multitude of different finance options out there for people that most people aren't aware of. Shops can get stock finance. If you're in retail, you can actually buy your stock on funding and then pay them once you've sold it off. A lot of people aren't aware of that type of funding. And we always have a plan A, a plan B, a plan C. If you speak to an expert, we'll know who we're going to place that deal with. If that's a no, we'll have a backup for it. If you do that yourself and the bank says no, or whoever says no, you're back to square one. And it's time consuming, and you're a business owner, you've got a business to run. You don't want that extra pressure or time consumption of having to go back and forth to different funders. My second good habit would be having the information ready. So any funder, whether it's personal or business, will need certain information from you. The basic information a funder will need would be your latest accounts and 3 to 6 months bank statements for the starter. The amount of businesses I speak to who require funding come to me and say, can I have some funding? And I say, sure, can you send me the information? And then you don't hear anything for a week. Is unbelievable. So having the right information to hand, and also when I come back and request more information, which may be the case depending on the funder, responding quickly will also help you get the funding quicker.
So it's essential then that you've got all the correct information, accounts, and a handle on your figures before you speak to someone like yourself.
Yeah, customers need to know what's realistic in terms of where they're going to go with lending. You can't just say, "I want £1 million" if you can't afford to pay back £1 million. And funders will need certain information to analyse to make sure that they're going to take the risk and lend you the money. So latest file accounts, bank statements, some management accounts for the last 3 or 4 months, and even looking into the future once you have this funding, do some cash flow forecasts. All of this information is brilliant for a funder to look at and deem you creditworthy and give your business the best chance of getting the money.
Yeah, the better that is for you, then the more likely it is you will get financed, the right finance and the best rates, I suppose.
Yeah, absolutely. The devil's in the detail with any funder. They're not just going to give anyone money just because they put their hand up and ask for it. They've got to make sure it's affordable and that the business is going to be making money in the future for them to take that risk. Okay, habit number 3 is being flexible. If you can't get the funding you need in the form of a big loan, look at the smaller steps you can do. Could you have some invoice finance help your cash flow? Could you have asset finance help you buy kit or machinery? And then could you then take a smaller loan which you can afford and would be more cost effective?
We wouldn't even have to tackle it all at the same time then. You could almost break it down like, we know that this will help us get through the next 3 months, which will free up further financing. We'll be able to raise more invoices. So I get tackling it in smaller steps is probably a lot easier for a lot of businesses.
Absolutely, it's baby steps. You know, if you've got a grand plan for your business, Rome wasn't built in a day. You don't need to do it all at once. You just prioritise what's most important. Do that bit first, and then look at the other bits down the line.
So if I'm a business and I've watched this or I'm listening to this now and I'm thinking I actually do need to raise finance, or finances are difficult at the moment, where could we find information so we can speak to you?
So you can find us at real5finance.com. My number's on there, email's on there as well, or on LinkedIn.
So thanks to Mike for joining us and sharing with us his good habits when it comes to raising business finance.